Welcome to today's video. We have seen the cash book, purchases book, and next in our list of subsidiary books is the purchase return book. So, the purchase return book is maintained to record those goods and materials which are returned to the suppliers, and these goods have to be purchased on credit. Neither the return of goods purchased on cash nor the returns of any asset other than merchandise are recorded in this book. So this book is maintained exclusively for the return of goods which are purchased on credit. Goods can be returned for any reason, either they are defective or they are not as per the order, or the goods have been delivered late and customer has refused to accept them. So, in all these cases, the purchaser prepares a debit note and sends it to the supplier. Debit note is a document notifying the person that a debit has been made to his account. It's prepared when the goods are returned, and on its basis, an entry is recorded in the purchase returns book. So, whenever you're returning goods and it is a purchase return, your business will make a debit note. So, here is the format of a purchase return book. You have date, particulars, and instead of invoice number, you will have debit note number, and then the rest are the same. Also note that whatever purchases return book, the total that we will get, that amount will be transferred to the purchases return account and it will be posted on the credit side at the end of the month. Let's do this problem to better understand how to make purchase return book and post it accordingly in the ledgers. As you can see here, enter the following transactions in the purchase return book of Sri Govind Ram. 2014 June 15th, we have returned goods to Ram Kishan and Sons for 2000 rupees with a trade discount of 10%, and we have returned goods for 5000 that were not as per the sample. Okay. So, first step would be to create this pro forma, and on top we will write in the books of Sri Govind Ram. So 2014 June 15th, Ram Krishan and Sons. Okay. So we have amount of 2000 less rate discount of 10%. So we have to first calculate this 2000 will be our gross amount. From this we will deduct 10% to get our net amount of 1800. Now the next transaction is on June 20th we have returned goods to Gopal Sons for 5000. Now here we will not have any gross numbers because they have given us the final amount, so that we will directly post in the net column. June 20 Gopal Sons rupees 5000. So now we'll total this up. We'll write June 30 purchase returns account the total 1800 plus 5000 will be 6800. So this is how we create our purchase returns book. Now, like in the previous lecture, we have to make supporting ledger account. So I will open a ledger account in the name of Ram Kishan and Sons, then one more in Gopal Sons, and the next in purchase returns account. So note that purchase returns account in nature is a credit account. It will be, its balance will always come on the credit side. Why? Because see, you are returning goods. When you are returning goods, the expense that you owe, the liability you owe is reducing, right? That is why it will have a, so it's a sort of a gain, like, like a discount received, but not a discount received. You're sending out goods. Your purchase expense is reducing. So that is why it will have a credit balance. Now let's make the ledgers for the, now let's make the corresponding ledgers. My first ledger will be Ram Kishan and Sons. And Sons account. Then I'll have Gopal Sons account. Then I'll have purchase returns account. So in Ram Kishan and Sons, I will write the net amount of 1800. So what would be the journal entry for a purchase return? Ram Kishan and Sons account debit to purchase returns account. 2014 June 15th to purchase returns account. $1,800. Since I have not been given any other details, I won't be writing anything else in this ledger account, nor will I be balancing it. Now, my next transaction in for Gopal Sons, we returned goods worth 5,000 on June 20. So to purchase returns 5,000. And in my purchase returns account, in the month end, okay, so 2014 June 30, the total of all my purchase returns, I will write by sundries as per I will write by sundries as per purchase returns account the total. So what is the total in my purchase return book? 6,800, okay, on June 30th. So this amount will get posted in my purchase returns account on the credit side, 6,800. So I will write here 6,800. So the main points that you have to remember while recording transactions in your purchase returns book is you will only record those purchase returns which have first originally been bought on credit, okay? And whenever the business is doing a purchase return transaction, it will always create a debit note which will be written over here. So in the format, you will have to, in the pro forma, you will have to write debit note number. And whatever total that you will get in your purchase returns account, that will be posted in the purchase return account on the credit side with the statement by sundries as per purchase return account, in which all the totals of all the purchase returns will be posted on the credit side. Purchase returns account is a credit account by nature. That is all for this video. See you in the next one.